What up, everybody? Good morning. 2 minutes till we get started here, getting ready to go.
So the SPY channel I have for today is we open at 426 and we go to 426.
Already tapping the USD bands on Nasdaq, so it looks like we got that working for us today. It looks like the day ended early on that. Not the trade really swapping anything at all. Hit that like button, friends. Eunice, what is up? Welcome, newcomer. Welcome, welcome, welcome. One of my favorite restaurants in my city is your name, Eunice, or if I'm pronouncing it correctly. I went there a couple weeks ago, actually. It's in Houston. You got to Google it. I'm not making that up. It's like Cajun Creole inspired fusion, but it's fancy Cajun Creole type food. Ooh, you know, my family's Louisiana and French, so you gotta love our Cajun stuff. Welcome to the group. Welcome, everybody. All right, done it. Hit that like button, you guys. Ready to go. All right, market opening here. Liquidity maps coming through. Let's see. S&P gapping down probably about 65, 50. It's probably about 10 points. This is where we're taking. Now we are below the box. Let's give resilience a couple minutes. Ooh, resilience is looking good. To trade above the box, should I go heavy? Let me give it a minute. All right, whatever. I'll do one. I'm gonna trade across the box. Even if I got liquidity maps, we'll see what I get. Taking a risk on this one. Ooh, BRSU. All right, that's a tiny little trade. Once the mats come through, I kind of like it, kind of don't. Wish it was better. Could be worse. Could be better. Ooh, I like this song, but it's gonna get me a copyright strike. I was wondering. I was like, that Chris Isaac song remix, pretty dope. I gotta have to remove that. I forgot to switch on my other thing. All right, you know how it goes, everybody. Fill in the box here to hedge push or close it out. I'm gonna need about 10 points on that one. Oh, excuse me. I made a burp in the mic there. Morning, everybody. Market's opening a little flat and not so actionable, in my opinion. As we've seen last week, I think we're going to get kind of a mild non-volatile week. S&P hedge pressure force 27.5. I'd likely trade up a little bit to fill the gap and then hit some resistance, probably turn around. So I don't think it's going to do much outside of the range we've seen last week. This week, I think it's going to be a pretty mild week so far from the reads. Your day is done today? Yeah, for real, right, Lee? I don't know how that goes. Pretty simple setup. Come on, monthly maps up here. UVXY got nothing in the middle. Now we're good. Oh, monthly maps still. Oh no, it is not. It is looking worse. It is looking a little more volatile than normal. Keeping resilience in my eye. As long as it stays above 0, I'm pretty okay. I'll take like a $500 trade on this one. If I can get it. Ooh, longs liquidating. I don't like this at all. I'm not a big fan of that. I should have done micros. I keep forgetting. QQQ, bear long up. QQ is at resistance in the way here as well. All right, monthly map on Qs. Let's do that really quick. Go liquidity map, daily there. Pretty simple setup. I'm just long at hedge pressure, I'm gonna call it. See how fast it goes? That's it, resilience. Yeah, I can't scale out though. The problem with me, not me just getting one mini means I can't scale, which I should. I need to keep. Still getting. I'm still a little clunky in the mornings. Resilience is still coming down. Let me get a nice little bump and then I'll flatten it. I wish I had micro so I can hold a runner at half cap. All right, let me see micro. So I just close that out. Let me. Res is still pull. I should still hold on to that. Res is still pulling down. I would rather be in micros for this. All right. It'll be easier there. I thought it was in micros, but I was in minis. All right. SME still pulling back to here. We don't really have any alerts that are queuing me off on this one. Those of you using Rocket Security, y'all will know that inside the box, tiebreaker, res greater than 0, fill the box, res less than 0 this way. Res greater than 0, less than 0. It's now negative. I got out at the right time on that one. Manufacturing PMI comes out 9 minutes. I assume come out right at the turn of the hour. Okay, res is still hanging in there. I want to be in some micros for those announcements. Here we go. I'm gonna let this hit this bounce. I know it closed out early, but I didn't have any maneuverability on. I mean, I would close out right now if I did. Probably made $150 more. I'm gonna trade through here and see what the ISM numbers and everything come out as just before. That's why I like to be in a trade with some granularity so I can actually scale in and out. And your day could be over in any. Even if I didn't do anything, that my day could be over now. I'm pretty happy with that. UQQ still looking the same. The maps are still. I don't like the way that they're looking. They're actually looking pretty booty for the week. Down before up. We checked, by the way. You can't remove this pop up right there that keeps showing up. All right. Well, that's definitely bullish selling. So let's go here. If you go all the way to our cheat sheets, I'll pull this up. You can see what the monthly map's actually doing. Let's translate that for y'all. This is what we're looking for today. As the growing space gets larger, there's volatility that's brewing here. So we thought it was going to be a flat, uneventful week, but volatility could be back. Or could be coming back over the next couple of weeks. Right here. There is no strong bull side developing. Bear side's kind of holding flat. Bull side slipping up is bull's exiting position, so that's going to be an issue. Bullish liquidation. Let's take a look at the committed traders going into a little bit. I think I'm already on like a trading streak. I don't think I've lost a trade since what, Tuesday of last week? I'm like a week-long streak already. Whatever day it was. What is this all about? There's a little bit of that bull selling there. And it's flat and hard to read. There's really nothing to come out of that one. Let's keep our eyes and ears open for the data that's about to come out. So there is... Numbers happen, see what we get. Remember, we already tapped DD band top NQ, so that pretty much is already a day is over kind of signal. There's that DD band break alert that's there. Friends and family, smash that like button, please, everyone. Did Matt take a trade? I took a trade. I'm definitely, since like what? Monday was a loss. Tuesday was a win. I can't remember. Well, I made like 300 something bucks. Yes, the cheat sheet is easily available for everybody. Members. Oh, my project folders. Down here, cheat sheets. Platform features overview. Yeah, you missed it. I was in, I was out right before you got here. In the cheat sheet, are we expecting a bull zone? Sorry, a bull zone. How? From monthly map cheat sheet. Are you talking about on for DD, Charles? For a monthly map. So hedge pressure break being rare. Okay, so when DD's bullish, you don't expect the bull zone tap. That's not how to read that. What you expect is that if it rallies, then that's the highest it goes, and then it closes there. And you assume that. It doesn't mean it has to, but in planning a trade, I assume this, and I don't short this leg either. So the rules are as follows: as long as markets stay particularly rational, okay. When you open in the bear side, you close in the bear side 96.6% of the time on SPY with no irrational signals. That is our backtest number. Bull side, bear side, middle. You end up where you start more often than you don't without an irrational market. That's just the statistics. That's really strong statistics. So what you say is, if it rallies and keeps going up, I don't chase along in that area. I usually end my day there if I get lucky enough. So the way I would trade it is like an example. If I was long right there, I would go here and I would close out the majority of my trade, and I'd hold a little bitty runner to get that final tap and then close out of everything. Does that make sense? That's how I would trade it. But I don't plan for it to break that. I plan for, if it keeps going, that's the highest it goes. The majority of my trade, pretending that none of this is happening, typically ends on bear side resistance if I'm longing a bear zone. More often than not. If I'm feeling strong enough, I'll hold a runner for wave 2. So what DD tells us is not the direction it's not predicting the direction it will go, it's predicting where the supports will be. So where it will bounce from, not where it will go to, if that makes sense. As most of us kind of like navigate, especially through Rocket Scooter's landscape, we teach trading correctly is that you can't predict the stock market direction where it's going to go. And let's an example is that if it falls from here, then I bet that I get bull zone support if bullish. That's the one bet I do take, that it does reject a bull zone if bullish, which I'm looking for now. It doesn't apply today. We're opening in bear zone. So in bear zone, I don't bet that it goes to there and comes down. I bet that that's the highest it goes. More likely to close in the zone and open. So in reality, this one, I know it shows that as being the best possible the highest upside move I look for. This can do anything. Okay. I know it just shows the highest. I should probably change the graphic to say the highest expectation, the best you can hope for. And then opening in the middle, the bull zone tap is the tie break. So if we open in here, then I expect price to want to flux through to the other side. If we're trading through here, just because DD is bullish, I don't expect it to go there. But if it breaks into this area, I expect that move to take place if it breaks into there. So I try to put a little side note there. But then this just caps out the top. This caps out the bottom for risk and reward planning. So if I was like looking for a reward, I had a twofold trade, said I had like 15 micros and I wanted to scale out 10 and 5, I would close out 10 there and 5 there. Hold my runner. I might not even. So I have reward for both legs of the trade for the risk I'm going to take. Does that make sense? That's how I look at it. A great question. But I don't use that to bet that it puts you, just like with the float on the bands, right? So it's not like just because DD's bullish, it will go there. It will want to do that before it does that. And if it does that, we use it more as a risk management sense. If the market's falling and it touches this when it shouldn't touch that one first, then I know something's weird and I walk away. Just like here. If the market breaks through here and then goes to there, that is unusual move to break through bull zone, bear zone, go to bull zone. So that's unusual. I'll close out and okay. It's like as a risk manager, right? Yeah. Now, hopefully that explains it a little bit better, Charles. So everybody see how today I just kind of walked out. Let me grab this on accident. Walked away from this. That's where I would have closed my trade at. I held the whole time. Resilience is still positive enough to have some trade from the middle, but we don't bet on hedge pusher breaks 11% of the time. That happens. Or 89% of the time. You close on the same side of hedge pusher as well. So you see how I would have closed out at hedge. Easy peasy. Right here. We got that. Let's see what that data point came out as. Now let's see. Get some catalysts today. 49.8 on a 48.9. It's a pretty decent beat on the expectation, but still, I think today is going to be more volatile and choppy than anything. We had the manufacturer's PMI came out, still under 50, beat on the expectation, but market's rejecting hedge pressure on SPY off of this. And I think as I'm reading the monthly maps, I just made a tweet about it. It's actually looking like there's possibility for more volatility. I thought it was going to be flatter than it was, and when those reads came in, the market's going to probably experience a little bit more selling to open up this week rather than long setup. I took a long scalp out the door and closed at hedge, and then or closed before hedge, and then I'm pretty much done for the day. I think we're probably going to have a choppy sell day. Maybe 2 today, this week. Me no likey. Let's read some more stocks. Let's look for hedge breaks upside. Not too many on the hedge pusher break upside. Let's look at monthly hedge break. If there's anything at all. No, nothing there. Hedge pusher break down. Mild 20. So there's not a lot of stocks pushing through. Up or down. Total just like 30 something stocks picking momentum. This is gonna be just a flat choppy day. We're gonna end this day early. Do you have the statistics inside Discord? We don't have them. They're in the video somewhere. I don't think we have them printed in the Discord. Okay, and again, one of the reasons I hate putting statistics because people will misconstrue a statistic as a probability of success of a trade. So it's kind of dangerous to throw percentages out there in educational course. People say, oh, I'm gonna win this trade 96% of the time. What it does mean is that statistically on a back test under SPY, under a certain amount of conditions, and if you analyzed it kind of like a scientist or mathematician would, under the conditions of no irrational market, and no hedge pressure breaks or anything, that SPY only for a spot check of 2 months, 2 different times, we just spot checked it just to see if it was relatively noisy or, you know, 50-50 or whatever. And they both came in the high 90s like every single time. Then we said, okay, that's what it is. But think of it more like it's overwhelmingly probabilistic. To say that more often than not, you're going to close in the zone you close in. And what that does mean in realistic sense is that if the market is structured bearish, then you're not going to wake up and everybody be flipping their bear position to bull position without a catalyst or without an event. And so, yeah, people would blindly jump into trades with probabilities. And that's one of the reasons we didn't. But the numbers are there in our documentation, like internally. We created the tools. Like we created the tools, and then we created irrational rules to push that probability that high. So conditions, like under a certain amount of conditions, it behaves this percent of the time. I want that percentage to go up. Then I tighten up the conditions. I add different things. And so all these rules that we have were rules that would limit that data set further to where under those conditions, and that's what you get. So you have to remember it's under those conditions. So all white's green. Basically, the probability is that bulls stay bulls, bears stay bears. The majority of Wall Street don't flip their position for just random reasons on a Monday morning, right? Which does make sense. And then it takes events or catalysts to completely scare the entirety of Wall Street from one side to the other. And that's the way to really approach it. Price will tend to close in zone and open. Does that apply for hedge pressure as well? Yeah, and so the stats from the back test of those two-month spot tests. Remember, there's only 4 months of SPY. We were trying to decide when we have the back test module. You guys have been able to run back tests all day long to find out like history under different conditions, under the conditions of no irrational of the 5 rules we teach. Whatever side you open on, you close on the side you opened on. On SPY only, we only did this for SPY 2, it was 96.6. Which means only 3-point-something% of the time you had a catalyst that would push you one way or the other. Hedge pressure, under the same conditions, no irrational rules, and hedge pressure break is not included in that data set because it again is what you're measuring for, with 89%. You ended up on the same side you started off at more often than not. And again, it means that it usually takes a catalyst with those other 10% of the time that would have enough oomph to push the SPY out. Now, another reason that the back tests are dangerous and statistics are dangerous because it has to do with the time that you look at the market as well. The question is, when we were looking at those data points, one of the times the SPY was choppy for a week, the other time SPY was bullish. We said, well, if it's like that in choppy and bull market, then it's probably like that at all. But what does it look like in a bear market, a flat market, a volatile market, a slowly trending down market? Do those stats change? And how do you quantify each one of those? Either do those probabilities shift? Of course they do. So the idea was to create rule sets that made it so overwhelmingly tilted from 50% of the time. I was looking for 90% or greater so that it can encompass all markets. So like maybe if it's less efficient in other markets, it's still greater than 50-50. The goal is to have something that's greater than 50-50. So when you hear 96, don't say, oh, 96% of the time. Say it's greater than 50-50. That's what you're looking for. You're looking for which way the odds are tilting in almost all conditions. Does that make sense? Everyone, y'all follow that one now? So the real answer is, if under chop, it's the way that you're making a good generalization for something like risk measurement. If in a choppy market and a bull market, it works 96% of the time. Then the same mechanic would apply in a bear market, because bear zone would likely stay bearish under the same premise bull zone would stay bullish. And so if the theory is that it takes a big event to push people one side to the other. Big events only happen 1 out of 25 trading days, like every month or two, which is kind of anecdotal. That's what we kind of see, right? Big market moving events usually only happen once a month or so. So it just makes sense. And then if it's that high on the scale in the back test, then it means it's likely greater than 50 under all conditions. The reasoning for that is that you can't really you can't take the entirety of all days of the stock market and block it off into different sets of conditions. What do we call an up market? Is there limits to volatility there? What do we call an up market that does this? What do we call a down market that does that? What about a down market that does that? What about a flat market? What about a choppy market? What are the probabilities for each one of those? Well, to accurately do that, you have to define what each one of those actually means. How much do you wiggle around? How much are you allowed to fall? How much can you deviate? How much can it go up before it turns around and qualifies the other one? It's hard to chop the market into discrete data sets. So what we try to do is we try to create an irrational series of rules that applies to all market types. That was greater than 50% chance that you stayed in the same zone. If I keep adding rules here that tell me not to trade, that eliminate that day from consideration, then that probability goes up. So we created, we had the VIX risk interval rule, we had all these other rules, and then we had the DD rule. Once we got to the 5th rule, those probabilities are pretty secure and good. At the time we did this, we didn't have DD as well. At the time that we did these probabilities, we had hedge pusher breaks, risk interval breaks, and catalysts. That's what we're looking for. Risk interval breaks on VIX. So the addition of DD probably made it even stronger. If you're outside the DD bands, then you don't trade at all, and therefore, of those 96.6% of days in the old back test, how many of them would have been eliminated? How better would that probability have been? I don't know. The idea is to think that when you're trading, you just want the odds to be tilted in your favor. The better you know what they are, the higher your confidence in a bet is, but you never can know exactly what the odds are because it's stock market and it's random. But if something empirically does what it does in the 90-something percentile under the same conditions in two different data sets, when one is a choppy, wide swing and flat market and the other one's an up market, then one can assume that it's greater than 50% in most all markets, which is all I'm looking for. Tilt the odds one way or the other. Okay, cool. Resilience is negative. Shorts are compelling. Yeah, I agree. Right now, nothing else to say from here. SPY pulling back the bottom of the box. Resilience still positive. You guys know I took my trade. Everybody knows down here I longed. I longed outside the box. I gave it 3 minutes. Watch resilience. Resilience ticked up. All this ticked down. You go watch rewind the stream. You'll see that. I closed out right there because I grabbed a mini instead of a bunch of micros. Ideally, I didn't have any granularity, but I would have X'd out there and just got out of the way. Res is positive, which means it's more likely to push to that side of the box at some point. At least here, likely to support. So I'm going to wait till an event that we're about to have comes through. We've got the ISM just 2 minutes. Yeah. Link for live Powell? Is Powell talking today? Oh, he is. I don't know, but if you want live Powell, just I like to read it on Financial Juice. Like they'll parse his comments out and make the important stuff read. I don't like to listen to what he. I like to listen to music when I trade. But maybe look on Twitter for it. Data points come at us today. Yeah, I usually like exactly. With Hal speaking, I tend to just kind of, I'll trade off of solid pivots. I mean, but in reality, we've got longing from here for as is greater than 0. Selling from here on hedge pressure. If it breaks through hedge pressure, I could probably take a long, but remember, Nasdaq already touched upper DD band. It's kind of like Nasdaq wrapped up its day today. And if I were to take a guess, I'm betting that we're trading lower this week. Lower for higher. Nasdaq today already gave me that kind of like womp womp, you know. Nasdaq resilience being the stronger of the, of the two, and you can see Nasdaq's already kind of created that into the day where it's yellow light already anyways. Half your position size. It's pretty normal. 1 minute till ISM manufacturing numbers come out. Make sure I get that. We've been ticking up lately, which is kind of good. It looks at new orders, production. It looks like we're moving now. We're pre-moving. Market's getting a little crazy here. New orders, production, employment, supply deliveries, and inventories. It's all things in the manufacturing sector and the logistical chain. Helps you gauge inflation on the front end. With the cost push inflationary environment we had, which was the cost of goods and services, you had, you know, prices of things would go up because the price of employment would go up. Supply shortages, cost of raw materials to go up. So, you know, you had issues there. So any issues here can indicate slowdown economic activity, can help gauge inflation, all these other things that come with it. And so you'll see that all these other numbers, which are now coming out, are very important as well. I know the PMI is like the service number everybody cares about, but you want to read the stuff like the employment number and other things are very important as well. All right. The ISM numbers came out. You had a 51.2 on a 48.3 read for the September. That's actually pretty decent. And of course, construction spending came out as well. It came in flat. You're all right, brother. The PMI, the ISM manufacturing PMI, 49 on a 47.7 read. So actually, I was reading the employment earlier when I misspoke. But the employment is way over 50 now, which is interesting. Market's going to like this data. Again, irrational hedge break. Nothing really to take off of that. So it's like a vote from the purchasing managers of good or bad, right? It's a percentage of people that are voting good, percentage of people voting bad. It's like how that number works. The report shows a percentage reporting each response, and net difference between the number of response in the positive direction and negative direction. That's it. So you can see that like more people are seeing the employment situation go up, which is what we're expecting. We're kind of going in a hiring spree right now. The jolts are implying that. The unemployment numbers are implying that. One thing to know about the data coming out, the 51.2 on the manufacturing, that's a lot of votes in the positive direction, which kind of reflects the hiring spree we've been seeing, where the jolts coming down and continuing unemployment filings going down as well. It's like we're kind of in a hiring spree at this point in the market, which is pretty decent, the economy at this stage. But other than that, everything's still below 50. So better than the expectations, but still below 50. So people are still, you know, expecting slowdown in general. All right. Hal talking today. Rest of the day is going to be noisy, guys. I'm not really. This is not super tradable. If one were to act on this one, again, we're at DD bands. I trade inside of here and outside. I'll just let it do its thing and call it. Yeah. So like in general, one if one were playing, there's good risk and reward on that setup. But then you got this kind of ending the day already anyways, right? So honestly, I wouldn't touch it. So I'm not going to do it. Aren't we seeing any good opportunities to trade SPY day? Not really today. I think today is going to be noisy and choppy. The trade I've drawn on the screen is the only potential move I see. You got about 1.5 to 1 set up, and the probability is really low because the SPY is moving along. Nasdaq's gonna hit a really strong resistance, and then when you break DD bands, I don't really like to play that. So the best trades were the scalps through the box. Those two today, those are pretty obvious, easy setups. I took the first one. What a pretty song. This lo-fi covers of all the pop songs. Pretty good channel. You like it when I yell if I'm green? I don't like to yell. I have to keep my blood pressure down. All right, guys, make sure you should give us a follow. Subscribe to the stream. We're here every day. This is another winning day. Doing the small account challenge again. Back to normal. Back to live trading. Loving it. Trading in Rocket Scooter itself. You can trade futures now on our platform. Really exciting times for us. How's everybody feeling? How everybody liking everything so far? So good. Are y'all feeling the platform is... We're doing a lot of optimization projects to make that platform run even faster. So you should notice a lot of look and feel changes coming through in the next week or two. Just little things that are going to change every day. But what you will notice is faster switching between tickers and all that other stuff. Like on my end, it feels twice as fast as it did 2 weeks ago. It's quick. I'm building a lot of cool things to... Cheat sheets are going to be in the section called cheat sheets right here under platform features overview. Maybe I should move this to boot camp. Probably belongs there. Okay, I'm moving it to boot camp officially. It's more, is that more intuitive there? I wouldn't touch it today. Market's dead in the water. I don't care to do it. Now, again, this is the R&R on that is the trade to take. If one were to be a maverick, and one is not a maverick, one is a risk management. And when I say one, I mean myself, is a risk management focused trading machine who likes to win trades and not gamble. I don't want to commit to 2 hours of this. I'd rather go do work. I got a ton of stuff we gotta work on, so not worth my time. Already made a decent profit already. You're not seeing it? I moved it to the boot camp. Everyone should be able to see it. Do you see it? Right here, Randolph. So this is a load for you looking at Ribbon. It says BLU, but I don't see the daily levels. Originally on platform feature, only glossary is showing. Randolph, you might double check what roles that you have. Make sure that you have the right roles. You shouldn't see one and not the other. That's really weird. Oh, you know what it is? You guys, y'all, okay, everybody do me a favor real quick. you need to show all channels. This is everybody. Everybody. Listen, do this. Browse channels. You need to make sure you have all your channels clicked. This is a Discord feature. They've recently changed this to where your channels might not be there. They had a thing where you can turn off channels you don't want, and all of a sudden Discord like defaulted to where not all of them are showing. Make sure you have all channels added in Discord. Everyone, make sure you do that real quick. That's a Discord rollout thing. That's it. Yep. Does anybody else have that issue? I wonder if I can make the bot force you guys to turn on channel. Let me try like this. It's not a training day. We're smart enough to see that, everybody. Right. I like how, you know, I'm on a space right now and people are looking for direction and stuff. We're not. We know that the market's gonna be random and weird from here by the end of the day. I made a little note of that in the Discord. That's so weird. The Discord keeps blocking when you pull up your saved browser settings. So just open the Discord app. That might make it easier instead of the browser. All right, yeah, so that kind of fixed it. Okay, cool. Everybody, make sure we're gonna call it. This is a pretty simple, easy day. Not much else to say here. Call it literally. Trading from here is just dumb. Like, I'm not gonna do it. I'm listening to people on spaces try to trade from here. I don't want to go in there and interrupt their learning experience and let them figure it out on their own. We know we're smarter than that. Market's going to chop around. Close to DD band, not worth taking an entry. Even though the risk reward was pretty decent, I called to sit down, see markets and trading down since I said that. Got the couple scalps I wanted today. I think after today, everything's going to be kind of a wash. Anything from here, we'll just be pushing it. Pretty easy win this morning. It was pretty easy setup. You know, it was pretty common to see that setup at the open. Wasn't hard to figure that one out. R&R was okay. Anyways, check us out. Rockets Grooving, $35 a month extended trial. You can check out our program. You can use our platform. Get all your data feeds for that and check it out. $35 a month for 3 months. For all the full suite and features is normally $200. You can unlock all that and just try it all out for 3 months, and you can quit it at any time. To our growing community, and give us some love. Come in the Discord, learn about trading and how to trade with the Rockets Grooving platform. We love y'all. We'll see y'all later.